Hi students, 12th Standard Accountancy, Chapter-5, Admission of a Partner, Illustration sum number 26. Amir and Raja are partners sharing profits in the ratio of 3:2. Their balance sheet is shown as under on 31/12/2018. Balance sheet given in the box, okay. Rohit is admitted as a new partner who introduced capital of 30,000 rupees. Rohit is a new partner. At the time of admission, he brought 30,000 rupees as capital. So, cash comes into the business in the name of capital. What is the journal entry? Cash or bank account at 30,000 rupees to Rohit's capital account 30,000 rupees. For his 1/5 share in future profit. So, new partner Rohit's share of profit is 1/5. How can he get that 1/5 share? Old partners whose names are Amir and Raja sacrifices their share of profit only in favor of new partner Rohit. Rohit will get 1/5 share of future profit. Okay. So he brings 10,000 rupees for his share of goodwill. So whenever new partner comes and join into the partnership firm, he will bring two things. What are the capital and the goodwill? Rohit's capital account 30,000 rupees he contributed to the business, and the goodwill amount, his share of goodwill amount 10,000 rupees also new partner Rohit contribute to the business. That 10,000 rupees immediately transfer to the old partner's capital account in their sacrificing ratio. Why it goes to old partner's capital account? Why? Because old partners Amir and Raja only sacrifices their share of profit in favor of the new partner Rohit. Okay, then only Rohit will get 1/5 share of future profit. Okay, so that always that goodwill value will goes to old partner's capital account in old sacrificing ratio. Sacrificing ratio is not given in the question. What we have to, we will consider the old profit sharing ratio as the sacrificing ratio. Okay, so that 10,000 rupees goodwill will be transferred to the old partner's capital account with old profit sharing ratio. Who are the old partners? Amir and Raja. Okay, that 10,000 rupees goodwill. What is the journal entry? New partner bring 10,000 rupees goodwill. So cash comes into the business in the name of goodwill. Whenever new partner bring the cash towards goodwill, the journal entry is cash or bank account at 10,000 rupees to old partner's capital account. Who are the old partner? Amir and Raja. So the 10,000 rupees will be distributed to their old sacrificing ratio. Sacrificing ratio is not given in the question. We have to consider that old profit sharing ratio as the sacrificing ratio. So 10,000 into 3/5 for Amir's capital. 1/5 is 5, 2 5s are 10, 3 0 is to be here, and 2,000 into 3s are 6,000 rupees. That share of goodwill goes to Amir's capital account, and 10,000 into 2/5, 1/5 is 5, 2 5s are 10, 3 0, 2 2s are 4. Okay, that 4,000 rupees share of goodwill goes to Raja's capital account. Okay, are you clear? Then following revaluations are made. Stock is to be appreciated 14,000 rupees. Stock amount 10,000 rupees is given in the question on asset side. So stock is to be appreciated 14,000 means the stock value increased from 10,000 to 14,000 rupees. Appreciation means increased. Depreciation means subtracted, decreased. Okay, less. So stock value increased how much rupees? From 10,000 to 14,000, 4,000 rupees increased. So what is the journal entry? If the stock account increases, asset value also increases. Whenever asset value increases, revaluation account is to be credited. Okay, so which account is to be debited? Asset item, that means stock account is to be debited. Stock account data 4,000 rupees to revaluation account 4,000 rupees. First we need to pause the journal entry from the question. Okay, from the given adjustment, and then the furniture is to be depreciated 5%. Furniture value 40,000 rupees is given the question. From 40,000 rupees, furniture value 5,000 rupees decreased, which means 20 is to be cancelled for this 20. 4 5s are 20. This 20, this is added here. So to that 2,000 rupees furniture value depreciated. Depreciated means what? decreased. Whenever furniture value decreases, asset account also decreases. Whenever asset account decreases, revaluation account is to be debited. So what is the journal entry? Revaluation account debtor to furniture account 2000 rupees entered. Then machinery is to be revalued at 80,000 rupees. Already we have machinery value 60,000 rupees in the question. So here revaluated machinery 80,000 rupees. So the machinery value increased from 60,000 to 80,000 rupees. So machinery account increases. Whenever machinery account increases, revaluation account is to be credited, right? So which account is to be debited? Asset account, which means machinery account is to be debited. Okay. So machinery account debtor 20,000 rupees to revaluation account 20,000 rupees. Listen in the box from the question. Reserve fund 15,000 rupees. Reserve fund will goes to old partners capital account with their old profit sharing ratio. What is the journal entry? Reserve fund account debtor to old partners capital account. Okay. So reserve fund account debtor 15,000 rupees. Who are the old partner? Amir and Raja. To old partners capital account, old profit sharing ratio is 3:2. So 15,000 into 3 by 5 for Amir. Okay. 1 5 is 5, 3 5s are 15, 3 3s are 6, 3 3s are 9 into 0, 9,000 rupees goes to Amir's capital account from reserve fund, and 1 5 is 5, 3 5s are 15, 3 0 is to be added here, 3 2s are 6, 6,000 rupees goes to Raja's capital account from reserve fund. Okay. Then now we are good. So adjustment related transactions we pause the journal entry. Now we are going to prepare the revaluation account. That means a ledger account as the revaluation account. Okay. What is the format? There are two sides, debtor side and creditor side, particulars and rupees on both the side. Okay. So listen here. What are the accounts related to revaluation account? We are going to enter into the ledger account, which means revaluation account. Okay. So where is it? Listen, the third transaction we have the revaluation account. Where is the revaluation account? Revaluation account is on credit side. So you go to credit side of the revaluation account, you are going to enter the opposite account, that is stock account. By stock account 4,000 rupees entered. Then where is the revaluation account? The fourth transaction we have the revaluation account is on debtor side. So you go to debtor side of the revaluation account, you are going to enter the opposite account, that is furniture account 2,000 rupees entered. Then where is the revaluation account? Fifth account we have the revaluation account. Fifth transaction we have the revaluation account. Where is it? It is on credit side. So you go to credit side of the revaluation account and write opposite account, that is a machinery account. By machinery account 20,000 rupees entered. So revaluation related transaction we entered from journal entry to ledger. Now we are going to find out the balancing figure. How can we find out the balancing figure? Which side we have the higher value? That side. First we need to find out the total, calculate the total. In this way, credit side we have the higher value. 20,000 plus 4,000, 24,000 rupees. Okay. The same total we are going to enter on debit side, and after you enter the total, below the total you are going to draw two lines, which means total, which denoted total. Okay. Then now we are going to find out the balancing figure. Okay. So listen here. If you get total on debit side, you will get the balancing figure on credit side. That balancing, that difference value is called the profit on revaluation account, right? Okay. So how can we find out the difference? From total minus lesser value, you will get the difference between. Okay. So 24,000 minus 2,000, you will get 22,000. That 22,000 is called as profit on revaluation account. Okay. That profit on revaluation account immediately transfer to the old partners capital account with their old profit sharing ratio. Who are the old partners? Amir and Raja. Okay. So that 22,000 into 3 by 5 for Amir. 1 5 is 5, 4 5s are 20, remaining 0, remaining 2, 20, 5 4s are 20, okay, 2 0 is to be added here, then 2 0 is here, 3 4s are 12, remaining 1, 3 4s are 12 plus 1, 13. So 13,200 rupees profit goes to Hamir's capital account. Then the same 22,000 profit will transfer to Amir's capital account in Amir's profit sharing ratio, which means 2 by 5. 1 5 is 5. The same. Okay, 4 2s are 8, 4 2s are 8, 2 zeros to be added here. Okay, so Amir's share of capital is 8,800 rupees transferred from profit on revaluation account. After transferred profit on revaluation account from profit on revaluation account to old partners capital account, we immediately pass the journal entry for the rebalancing for revaluation account. How can you pass the journal entry? What is the journal entry for the balancing on revaluation account? Where you find out the balancing figure, debit side or credit side? Debit side you find out the balancing figure, right? So revaluation account data 22,000 rupees. Why? Because you got a balancing figure on debtor side of the revaluation account. It is very easy. So revaluation account debtor 22,000 rupees to get it transferred to the old partners capital account, right? So to old partners capital account. Who are the old partners? Amir and Raja. Amir's capital account 13,200 rupees and Raja's capital account 8,800 rupees. So we prepared revaluation account. Okay, now we are going to prepare the capital account. So the heading of the format of the capital account, there are two sides of the capital account, debtor side and creditor side. Both the side same format, particulars and respective partners same. Who are they? Amir, Raja and Rohit. We entered on both the side. This is the format. Always we started the capital account on credit side. The opening balance of the capital account we always started on credit side. The opening balance of the capital account will show on credit side. The opening balance of the capital account is given in the question. Okay, on liability side capital account, Amir's capital 80,000 rupees and Raja's capital 70,000 rupees. So in opening balance, how can you write? By balance brought down. By balance brought down means what? Opening balance of the capital account. So 80,000 goes to Raja's capital and 70,000 goes to Amir's. 80,000 goes to Amir's column, 70,000 goes to Raja's column. Listen here, after enter the opening balance, listen, what are the transaction related to capital accounts appears in this journal entry, it will be show on capital account, right? So in this way, first we are going to check where is capital account. The first transaction we have the capital account. Rohit's capital account is on credit side. So you go to credit side of the Rohit capital account. You are going to enter the opposite account. That means a bank account. Rohit column you are going to enter 30,000 rupees because your new partner Rohit bring capital 30,000 rupees. Okay. So we entered. Then where is capital account appears in the journal entry? The second transactions we have the capital account. It is on credit side, old partners capital account. So you go to credit side of the capital account, you are going to enter the opposite account by bank account. 6,000 goes to Amir's column, 4,000 goes to Raja's column. Then where is capital account? We can see here. Listen, the sixth transaction we have the capital account. It is on credit side. Okay. Old partners capital account. So you go to credit side of the capital account and write the opposite account, that is reserve fund. By reserve fund account 9,000 rupees and 6,000 rupees entered on Amir and Raja's column respectively. Then where you see the capital account, the seventh transactions we have the capital account. Okay, so where is it? It is on credit side. So you go to credit side of the capital account and write the opposite transaction, that is revaluation account. So by revaluation account 13,200 rupees enter on Amir's column, 8,800 rupees enter on Raja's column. So we completed capital account. Now we are going to prepare the total, calculate the total. Now we are going to find out the balancing figure of the closing balancing figure of the capital account. How can we find out the closing figure of the capital account? First we need to calculate the total. Which side of we have the higher value, that side we are going to prepare the total. Okay, in this way we have higher value on credit side. Okay, so we have to calculate on credit side. Calculate the total on credit side. Okay, so 80,000 plus 6,000 plus 9,000 plus 30,200, you will get 1,08,200 rupees. Then 70,000 plus 4,000 plus 6,000 plus 8,800, you will get 88,800 rupees and 30,000 rupees entered. Okay, in the total. The same total you are going to enter it on debit side. Okay, after enter the total, below the total you are going to draw two lines, which means this is denoted as total. Okay, so we prepared calculated total. How now we are going to find out the balancing figure. Which side we have the lesser value, that side we are going to find out the closing balance of the capital account. In this way we have the lesser value on, in this way there is no value on debtor side. So when if opening balance of the capital account on debit side, the closing, in this way the closing balance of the capital account is on credit side, debit side. Okay, so there is no value on debit side. So what we have to do, the total value you are going to enter on debtor side. The same total you are going to enter on. There is no value on debtor side. What we have to do, the total amount you are going to enter here on debtor side. So 1,08,200 rupees, 88,800 rupees, 30,000 rupees we entered from total on debtor side. Against this value you are going to write by to balance carried on. To balance carried on means what? Closing balance of the capital account. Okay, immediately you are going to brought it down to the opposite side and enter below the total the same closing balance value. That means 1,08,200 rupees, 88,800 rupees, 30,000 rupees. Okay, after enter against this value you are going to write by balance brought down. By balance brought down means opening balance of the capital account for next accounting period. Got it? So we prepared capital account. Now we are going to prepare new balance sheet as on 1st January 2019. Okay. The format of the balance sheet, there are two sides, liability side and asset side. Always you started it on liability side is easy for you. The first account for the liability side is a capital account. Okay. So who are the partners contributed capital? Amir, Raja and Rohit. So Amir's capital is 1,08,200 rupees and Raja's capital is 88,800 rupees and Rohit capital is 30,000 rupees entered from capital account. Okay. Then what are the items they given in the question related to liability items? On liability side we have one item that is creditor, 35,000. It will be goes to liability side. Okay, so creditors 35,000 we entered. Now we are going to prepare the asset side items. Okay, in question side, in the question we are going to enter from the question. Okay, the first item is machinery. Machinery 60,000 rupees entered. Appreciation 20,000 rupees is to be added from with 60,000 you will get 80,000 rupees. Then furniture 40,000 rupees entered from the question. Depreciation 2,000 rupees is subtracted from 40,000 you will get 38,000 rupees. Then debtors 30,000 rupees entered from the question and stock 10,000 rupees entered. Appreciation 4,000 rupees added with 10,000 you will get 14,000 rupees. Prepaid insurance 40,000 rupees. Listen here carefully. Cash at bank we have 20,000 in the question. Okay, listen. Cash at bank 20,000 rupees plus new partner Rohit bring capital in the name of new partner Rohit bring cash in the name of capital, right? Okay, so cash comes into the business. That cash 30,000 rupees will be added with the cash at bank and Rohit contribute 10,000 rupees is a share of goodwill. So 10,000 rupees comes into the business, it will be added with the cash at bank. It is to be added with the cash at bank. So cash at bank 20,000 rupees given in the question, with that 20,000 rupees, we have to add Rohit capital 30,000 rupees plus Rohit share of goodwill 10,000 rupees. After added this all amount, you will get 60,000 rupees is to be entered on outer amount column of the asset side. Okay, so balance sheet related transactions we entered on liability side and asset side. Now we are going to find out the total on both the side. First we find out liability side total. Okay, so 2,27,000 plus 35,000 you will get 2,62,000 rupees. Now we have to sum up the asset side total. Okay, so 80,000 plus 38,000 plus 30,000 plus 14,000 plus 40,000 plus 60,000, you will get 2,62,000 rupees. Listen, so we have same value on both assets and liability side, that is 2,62,000 rupees. Okay, so do you have any doubt? Please comment it to the comment box. Thank you. Take care.